So this stock that you see on your screen here is up nearly 150% in the last month, and you probably have never heard of this company before. So many investors, including myself, never really came across this stock when I did my research on EV companies, but the stock is starting to gain some attraction here because there are some hedge funds that started buying. In fact, one of the hedge funds that correctly called the workhorse play is buying this stock now, so it's worth taking the time to look into this company. But guys, I'll say this, while things do look good, and you see the first half of my video here is pretty much going to be what the company is and the positive things about the company, there is still some really big red flags which you need to pay attention to. So don't skip through this video, make sure you watch the entire video if you are considering investing in a business like this. But either ways, before we get into it, leave a comment in the comment section down below what your guess is on what this EV company is. I can almost bet that most of you have never heard of this before, but I'll be curious to see if anyone does guess it right based on the stock chart. And while you're down there, guys, smash that like button down below as well to show your support for the YouTube algorithm. Okay, so now that your guesses are in, the name of the company here is Nano One, and the ticker symbol is NNOMF, and is currently traded over the counter. They are a company that's based in Vancouver, British Columbia, Canada. So for my Canadian viewers, this can also be traded under the ticker symbol NNO on the TSX Venture Exchange. So Nano One here is a technology company, and what makes them unique specifically in the EV space is that they have a patented process for low-cost production of high-performance cathode materials used in lithium-ion batteries. As we know, electric vehicles need batteries. That's kind of the bare bones of this technology. So this is a very hot space to really be in. They state here very clearly that the company's vision is to change how the world makes battery materials. So let's see how they plan to achieve this. The company provides us a timeline of their progress through the years, so I thought this would be a good exercise to go through to see how they tend to execute. They IPO'd back in early 2016, so they have been public on the markets for a few years now, so this isn't a hot new IPO stock necessarily. That being said, over the years, they have won a handful of few million-dollar grants, helping them continue to innovate, patent, and grow their business. In 2019, they had a pretty big year, and they created some big partnerships here with some massive brands, most notably Volkswagen, which we'll briefly touch upon in a second. And now in 2020, the company hit a milestone of $100 million market cap. And guys, most recently, as of recording this video, that market cap has nearly doubled to nearly $200 million. So clearly this is a business that is trending in the right direction, and that is very good news for potential investors at this point. Now back in 2019, the company inked a very big partnership with Volkswagen Group Research, which will work with Nano One to create a new generation of lithium-ion batteries. Now this is exciting because VW is a large worldwide player in automotive, and they plan to have 22 million electric vehicles on the road in 10 years. The technology from this partnership here between VW and Nano One will help VW boost longevity of their batteries and increase range of their batteries as well, which are two extremely important factors, arguably the most important factors for EVs. Using the technology being built on Nano One, this could be a huge opportunity for Nano One, and Volkswagen may eventually even buy them out if things do end up going well. VW isn't the only company here that they are partnering with. As we saw, there's another one called Pulead, which is a large cathode company with around a 15% market share and has customers like Apple under their belt. Then you also have a partnership with Saint-Gobain, which is a company focused on thermal processing. And guys, this is a massive company that I personally have never heard of before. 45 billion euro company, and has been around for 400 years, creating things like glass, ceramics, and building materials. So even though VW is a big partnership, this is another big partnership here that they landed with a well-established global player to help them enhance high-temperature cathode processing. So there's clearly a lot of positive things going on with the business right now, and they've landed some pretty big partnerships with pretty global companies, which legitimizes this company. What this also does is kind of gives them access to a worldwide exposure, which really for any business is ideally what you want to achieve. Now, if you're wondering details like how big is the market, why is this such an exciting opportunity? Why could this be a pretty large company here? Let's get into those details right now. So the global cathode market is expected to be worth around $23 billion by 2025. The company has 16 patents under its belt and another 30 that are pending. They have a licensing opportunity here of over $1 billion, which if landed would make those patents of theirs extremely lucrative. Now, the market opportunity and where they can literally shine is broken down into 3 segments. You have commercial, you have automotive, and you have next generation. Commercial would be kind of your standard battery, which would offer benefits like lower cost. It would be the safest option here and would be the longest lasting battery as well. Applications for this, as they outline here, would be things like public transit, like buses, where you don't necessarily need performance, but you do need them to be as affordable as possible and last as long as possible. Next is automotive, and as the name implies, this is for your consumer cars like VW cars perhaps. This would use a more advanced battery, which would allow for a longer range, which is a high priority for customers that are looking for an electric vehicle. Tesla, for example, is able to achieve over 400 miles now on their Model S, so the bar is set extremely high for range, and this is what consumers expect. Then last, you have next-gen batteries, which will be cobalt-free, be high voltage, and have faster charging speeds, but of course would be more expensive as more R&D has to go into this technology to develop this. If you're wondering where each of these battery types really fit in the current market with companies that produce vehicles right now, you can see a chart here and breakdown of some of the big EV players and where exactly they play and how each segment of this market is expected to grow by 2025. Clearly, there's a lot of opportunity and a lot of optimism here in this space. As of today, the business is not yet profitable. However, they have laid out a case here showing us year over year how they plan to grow their margins and become a highly profitable business with scale. The revenue model shows by 2021, they expect to be break even, and by 2025, they expect tens of millions, not only in revenue, but in profits as well. This is because they are focused on the basics here, which are reducing expenses and increasing margins, and this leads to more and more profits as the business grows. Now, if you watch my channel often, you know that I always talk about a path to profitability, especially when it comes to highly speculative or high-risk businesses. It's no good investing in a business, in my opinion, that has no idea how they're going to become profitable, because at the end of the day, you invest in companies so that those companies can make money and then in turn make you money. It's not really a charity case when you invest in companies, so just keep that in mind, and that's something important that investors typically overlook. This is typically where I find the management team is very important to look at, because you need to have a team that is laser focused on executing and have a plan to eventually become profitable, because like I said, I'm investing for profits eventually over the long term. I'm okay with the business losing money in the short term. I'm okay with the business, ramping up and using any sort of money that they earn back into the business to grow it even more. I'm all for that. But if I don't see a path to them becoming profitable at some point, and the company doesn't clearly outline that for me, it's typically not a stock that I would grow into a large investment. I may have it as a tiny spec play in my portfolio, but it remains pretty much negligible for me. NIO is actually one of these businesses that does not really have a clear path to profitability, and as a result, it's a stock that I do hold, but it's such a small part of my portfolio that it's more or less insignificant. So I briefly mentioned the management team, so let's look at that here, and we can see that with this team, I see a group of individuals that have a lot of experience in the workplace, mainly focused in the energy and power industry. They have 6 PhDs on the team, which help them continue to innovate and file new patents. Now, I won't say that any of these individuals in particular stand out to me as a wow factor and makes me want to throw my money into this company, but together there seems to be some good experience and brain power in the room around the energy and battery industry in general. Now, like I said, the stock is trading at nearly a $200 million market cap today, and the price per share is $2.44. This is more or less a penny stock, guys, at this stage, so proceed with caution if you decide to invest here. This stock can easily see some extreme volatility, and the risk of losing a significant portion of your investment in Nano One is extremely high. So I'm giving you a fair warning here. I don't want to see any comments in the comment section down below saying, oh, I watched your video and I threw my life savings into this and I lost all of it and all that stuff. Just be smart with your money. This is a highly volatile, high-risk company. Yes, their mission is good. Yes, they have partnerships that are good. And yes, they have an outlook that looks good. But if anything goes wrong, or a few things go wrong, like maybe VW pulls out of the partnership, maybe their path to profitability isn't so clear anymore because things changed, maybe they get to the point where they actually have to raise a ton of debt or they go bankrupt, all of those things can result in some big losses. Okay, so now for those of you that stuck around to this point, I'm gonna share something which I hope every single investor that invests in this company is aware of. Here on the screen, you can see the revenue for the company, and they have currently no revenue coming in the last quarter or in the quarters before, and they have nearly $3.5 million of losses. So they are essentially purely burning cash here. Looking at their balance sheet, you see total assets of the company sits at around 12.5 million, with around 11.3 million of that being in cash and cash equivalents. But at the rate they're losing money of 3.5 million per quarter, this means within a year with no revenue coming in, they will be bankrupt. Their liabilities are not too bad, sitting at under $1 million, and long-term debt is around 129,000 or so. So this is very manageable with their current cash. But the main concern here isn't the liabilities, it's the amount of cash that they keep burning every quarter with expenses to run their business. With their current cash position and the financial situation of the company, if things continue moving the way they are, they can survive another 3 to 4 quarters without having to raise more cash, tap into grants and all that kind of stuff. I know that they've been relying on grants quite a bit. You can see that from their slides. They earn grants quite a bit from governments, but during these times, governments may have paused those projects, or there could be other factors that maybe they don't get the grant, and really relying on that solely for a business is extremely risky. So that's another risk factor, another red flag to keep in mind. Revenues are still yet to be seen, so they need to find some way to make money outside of these grants. I know licensing is probably something that comes to mind, and hopefully we see them start to do this soon. But as of right now, we saw the figures, revenue is $0. Now, if they execute well and things actually go according to plan, this company could be fairly large. Say they become a $1 billion market cap company, that would actually put their share price at around $13 per share at current outstanding share numbers, and that would mean a pretty significant gain from today's prices. Now, will that be realized over the next few months? Unlikely, unless irrational hype gets into the stock, it becomes like the next Nikola or Hyliion or one of those stocks, and the stock just rallies up on extreme optimism. That's possible, but who knows if that's gonna happen. I wouldn't base an investment just solely on that. But either way, guys, I'm going to repeat this once again. This is a highly risky company. At this point, it's a highly speculative business as well. And you may end up hitting it big with the stock, but you may also end up losing quite a bit if things don't go according to plan. So just keep that in mind, manage your risk accordingly. But I'm not here to tell you how to invest. I'm not a financial advisor. Just make your own decisions on that. But either way, let me know in the comment section down below if this business does interest you. I'd love to hear your thoughts as always, guys. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.